Most people with good W-2 salaries end up broke by retirement, not because they didn't earn enough, but because they never built a system to capture what they earned. I'm not talking about budgeting. I'm talking about a wealth building architecture that works while you're at work. In this video, I'm going to lay out the exact framework I use and that I see working across hundreds of W-2 earners building real wealth for maxing out every lever you have access to as a salaried employee. By the end of this, you'll have a 5-part framework you can start implementing this week. Here's the reality of W-2 income in 2026. If you make $120,000 and have no plan, you'll probably live paycheck to paycheck and wonder where the money went. If you make $120,000 with a system, you can be investing $40,000 to $60,000 a year toward long-term wealth without feeling like you're sacrificing your lifestyle. The difference is not income. The difference is architecture. There are 5 levers every W-2 earner has access to. Most people use 1 or 2. The ones building real wealth are using all 5 simultaneously. Let's go through each one. Level 1, max tax advantage accounts. First, before you do anything else, you need to be maxing your tax advantage accounts. This is the easiest, most guaranteed return you'll ever get, and most people leave it on the table. Here's the order of operations. First, your 401k up to employer match. This is a 50 to 100% instant return. Never leave this on the table. Second, your HSA if you have a high deductible health plan. Triple tax advantage, pre-tax contributions, tax-free growth, tax-free withdrawals for medical expenses. Max it. In 2026, the family limit is around $8,500. Third, max your 401k. The current limit is $23,500 per year. If you're over 50, the catch-up contribution brings it higher. Fourth, Roth, MyRA, or backdoor Roth. $7,000 per year in post-tax money that grows tax-free. If your income is above the direct contribution limit, use the backdoor Roth. Most W-2 earners with $100,000 or more in income can legitimately shelter $35,000 to $50,000 per year just through these 4 vehicles. That's money the government can't touch, ever, or until retirement. Lever 2, build your taxable investment base. After tax advantage accounts are maxed, everything else goes into a taxable brokerage account. The strategy here is simple. Broad index funds, low fees, long holding periods. I recommend M1 Finance for this. It's free, allows automatic rebalancing, and lets you build a portfolio that invests automatically on a schedule. Set it and forget it. Basic allocation for a W-2 wealth builder who doesn't want to overthink it. 70% total U.S. market index, 20% international, and 10% bonds or REITs, depending on your age and risk tolerance. Automate the contribution. Every paycheck, a fixed amount hits this account before you see it. That's the key. Remove the decision entirely. Lever 3, add real estate exposure. At some point, you need real estate in the picture, not because it's always the best investment, but because it offers what stocks can't: leverage, depreciation, and cash flow. 2 paths for W-2 earners. Path A is direct ownership. Buy a rental property. This is higher upside, but requires more capital and time. Works best when you have equity or savings to deploy and time to manage or oversee a property manager. Path B is passive investing through a syndication or REIT. This is where you put $25,000 to $50,000 into a deal managed by a professional operator and collect quarterly distributions. You get the tax benefits, K1 income, depreciation, pass-throughs, without managing anything. For W-2 earners who can't or don't want to be landlords, Passive syndication is the cleaner path. Fundrise is the entry-level option. Real syndications start at $25,000 to $50,000 minimums and are for accredited investors only. Lever 4, build a side income channel. This one is optional but accelerates everything. A side income that you treat as 100% investable, meaning you live on your W-2 and invest the side money, compresses your timeline dramatically. For W-2 earners, the highest are OI side income options right now. Consulting in your area of expertise, billing $100 to $300 per hour for what your employer pays you for full time. Digital products like templates, courses, and tools that generate passive sales. Content creation with affiliate revenue. Real estate, wholesaling, part-time. The rule: every dollar from the side income goes directly into investments, not lifestyle, not treating yourself, into the machine. This discipline is what separates people who hit financial independence in 7 years from those who hit it in 20. Lever 5, optimize your tax picture annually. W-2 earners often think they don't have tax flexibility. They're wrong. Every year before December 31st, run through this checklist. First, tax loss harvesting. If any taxable investments are down, sell them to realize losses and offset gains. Second, backdoor Roth conversion. If your income is above direct Roth limits, do this before year end. Third, business deductions. If you have any side income, structure it as an LLC and run legitimate business expenses through it. Home office, equipment, subscriptions. Fourth, charitable giving. Donor advised funds let you bunch charitable contributions and deduct them in a high income year. Fifth, review your W-4. If you're getting a large refund, you're giving the government an interest-free loan. Adjust withholding and invest that money instead. I use TurboTax Business for this. It walks through every W-2 plus side income scenario and makes sure I'm not leaving deductions on the table. 5 levers. Most W-2 earners use 2. Here's your priority order if you're starting from scratch. 1. Get to employer match in your 401k today. 2. Open a Roth, IRA, or backdoor Roth this week. 3. Set up auto invest into a taxable brokerage, even $200 per month. 4. Research one passive real estate option. Just research. 5. Schedule an annual tax review for November. You don't have to do all of this at once. Do it in order. Each lever compounds with the others. If you want to go deeper on any of these, the real estate side specifically, I've got a video on multifamily syndication for W-2 investors coming up. It's specifically for people who want real estate exposure without the landlord headache. Subscribe, and I'll see you in the next one. Thanks.